Welcome everybody, Doug McKay, anti-wallstreetguy.com on the 22nd of September 2011. This video will be applicable basically to everybody, bloggers, manage accounts, and 4-minute traders. So we'll cover it all in one tonight. As always, we're going to start out with a chart of the S&P cash closed at 1129 off the lows. We're looking at a daily chart. Looked pretty good last week at this time on Friday. We were above 1200 and we were above the 30-day, the 20-day, and it looked like we maybe were going for our upside target of around 1250, 1260. For the longest time we thought and still believe that this is a fourth wave. A fourth wave doesn't necessarily have to be a sideways wave, but in this case that's what has transpired. Yesterday, our line in the sand for our 4-minute traders was we were watching 1170 to hold, or basically 117 on the SPY. We closed below that yesterday, so we put out a post yesterday saying that the trend was changed from long to short. And at that time, if we pull up a chart of the SPY, we thought that we were going to hit that target basically of 115. We drew this line in yesterday, and we blew through that today on the open. So now the next question is, and we can't see gaps on the S&P 500 chart, but we can see it on the SPY. At some point, more than likely, possibly starting tomorrow, if not Monday, we will begin to go up and probably fill this gap. But I believe as long as we stay under 120, 117, the overall trend will continue to be down. I think individuals that didn't get out here, as an example, some of our long positions we held on to today, we will be exiting with any type of bounce that fills this gap and possibly be looking to add to our shorts. Let's take a look at the cash again. And if we draw in this double bottom here, we are not quite at a double bottom. It doesn't obviously have to hit a double bottom. We could stop here and do some type of retest failure, meaning we don't end up hitting this double bottom. But we're basically looking at 1100, 1101 here. Today, I believe the low was 1114 over in the left-hand side there in the box, 1114. So we could see more downside selling in the morning and then a little rebound in the afternoon. But the overall trend, it certainly looks like this is even more so now after the last 3 days, shaping up to be a fourth wave with a fifth wave down. If we squish this a little bit, instead of going right to a weekly chart, I drew in this support area as well at around 1050. So that seems to be, not that it's going to go there, but it appears to be the most probable target at this time, somewhere around 1050, 1070. If we get there from here, that's probably where we'll cover some of our short or SH position at that time. I really didn't want to add to the short side today, but we did anyway, and the reason for that is what I don't want to do is have this. This is a chart of the SH, inverse ETF, if you're not familiar with this, shorting the S&P. If this is going up, obviously the S&P is going down. But I did not want this to run too far away from support. So as it stands right now for you managed guys, we are more short than long, primarily because of the gaps that are left over. Once those gaps are filled, we will probably exit those longs and just maintain the short position that we have, provided we hold this 43. If we were to break this 43, we'll be exiting the shorts, which basically means on the SPY, we would have to get back above 120, 121. But for now, this appears to be a cap. All right, hopefully that all makes sense. What else are we going to do as time rolls on here? As I mentioned yesterday on the blog, we're going to be looking at selective longs and selective shorts based on the chart. So we're going to have a mix of both. Although the primary trend right now is down, we're also going to be looking to put on some individual long positions. One of the positions that we have in some of the managed accounts now, some of the bigger managed accounts, is Apple. We've talked about charts similar to this for the last 3 years, where once a individual position breaks out, it typically comes back down to test the most recent breakout area. So that could be anywhere from 400 down to maybe 395. We don't want to see it break essentially 382, or if we were to extend this trend line, which basically runs parallel to the 50-day moving average. Yesterday on the blog, we talked about looking to short oil and financials. Those ran away from us today, so we're going to wait for an opportunity to short those on any type of decent bounce. We didn't want to chase it today. As it is, we chased a little bit of the SH, but in the end, we think that the SH is going higher. We may pull back in again and fill this little, or at least test this downward sloping trend line. But we do believe we're going to at least test these highs. If we take a look at the ultra short financials, again, this is a chart that we would be interested in, not necessarily today, but on some type of pullback where this holds and then it heads up again. This is the SKF. We did, in some of these select managed accounts, we were short silver. We covered half that position today with about 45 minutes prior to the close. I believe this position today was up 19% today. Again, it was just a small position in more of the aggressive accounts. But if you look at a chart that we put up the other day on silver, let's pull this up, SLV. I believe it was a post that we put out on Monday, the 19th, that we said it may be time to short silver via ZSL. So that day, Monday, was here. You can see that silver took a hit, obviously, today. So that worked out well for those individuals that have it. Where did we get hurt today? We had a hard stop in the, even though we haven't been on board gold because we don't like the chart, we'll take a look at that in a minute here. We did have a nice chart going to all-time highs on the miners. That broke down today. We were stopped out at the open. I believe our stop was 61 and change. It was just at this low. It was at 61.35. Today we opened at 61.23. That's where we were filled. It closed at 59.30. So we did take a hit in that. We do still have a position in the XLU. It closed just at the 50-day today. We eliminated 50% of that position. We'll see if it comes back up and fills this gap. And we also kept some of our Qs, which was the NASDAQ 100, which looked very good last week, and also the first couple days this week, because we were still holding the 50-day moving average. We were still above this downward sloping trend line. This has since broken down, so we dumped half that position. So as it stands right now, the overall trend in the equity markets as of the close yesterday is short. I wish we would have got a bounce today instead of gapping down, but it is what it is. We believe that the market will continue to be short. Again, looking at a chart of the S&P cash until we basically get above 1210 on the S&P. Again, we see support here, possible double bottom bounce, could be starting tomorrow or soon. We also believe that would be short covering and then an opportunity to get short again. The overall obvious target is still 1050 on the S&P. Let's finish up with gold. GLD. Last week we talked about this where we drew in kind of this double top here, and then I believe at that time we had something in here like this where we said the best place to enter would be really a close above that 185 area. If you were to get long, wait till it got above. If you were more into risk, wait till it got above this downward sloping trend line, which it never did. But I see possibly GLD going down to this area of support over time around 155, 160. That's not to say that we're not going to see some type of bounce and everything tomorrow, other than bonds, of course. All right, you guys, that's it. Doug McKay, antiwallstreetguy.com. This post is good for everybody, 4-minute traders, manage accounts, bloggers, and you probably will not see anything tomorrow. Maybe I'll put up a still chart on LQD. I think that bonds are a little overdone, so we might do a counter trend trade in the double short bonds TBT. That's it. We'll see you guys either tomorrow or next week. Doug McKay, antiwallstreetguy.com, on the 22nd of September. The overall trend is down. We'll see you next week.